China, once considered a sleeping giant, has awoken and surged to the forefront of the global economic stage. In recent decades, this East Asian nation has witnessed an unparalleled transformation, propelling it from an agrarian society to an economic powerhouse. The story of China's economic growth is a tale of strategic reforms, technological advancements, international trade, and ambitious infrastructure projects. In this article, we delve deep into the remarkable journey of how China's economic power has grown and the implications it holds for the world. China's economic growth over the past few decades is nothing short of extraordinary. From a relatively closed and centrally planned economy, it has evolved into the world's second-largest economy, challenging established powers like the United States. The speed and scale of this growth have been remarkable, significantly impacting global trade, investment, and geopolitics. Understanding China's economic rise is crucial for various stakeholders, including policymakers, economists, businesses, and the general public. It offers insights into the dynamics of globalization, the potential and challenges of emerging markets, and the interconnectedness of today's world. China's rise has implications for trade patterns, job markets, and international relations, making it imperative to comprehend its trajectory. This article aims to provide a comprehensive understanding of how China's economic power has grown over the years. We will explore the historical background, industrialization, international trade, technological advancements, geopolitical influence, environmental sustainability, and future prospects. By analyzing these aspects, we hope to shed light on the factors that have fueled China's economic growth and what the future might hold. Before the late 1970s, China was primarily an agrarian society with a rigid, centrally planned economic system. The nation was characterized by poverty, limited international engagement, and a large population dependent on agriculture. The economic reforms initiated during this era laid the foundation for the incredible growth that followed. Deng Xiaoping, a paramount leader in China, played a pivotal role in introducing economic reforms in the late 1970s and early 1980s. These reforms shifted the nation towards a more market-oriented economy. Measures like opening up to foreign investments, decentralizing economic decision-making, and encouraging entrepreneurship were instrumental in boosting economic growth. Policies such as the Four Modernizations and the Open Door policy greatly contributed to China's economic growth. The Four Modernizations emphasized progress in agriculture, industry, defense, and science and technology. The Open Door policy encouraged foreign investment and trade, providing a significant impetus to economic development. The shift from an agrarian economy to an industrial powerhouse was a critical phase in China's economic growth. The country underwent rapid industrialization, with a focus on heavy industries and manufacturing. State-led industrialization policies, investment in infrastructure, and a vast labor force were pivotal in this transformation. Foreign investments and joint ventures played a crucial role in modernizing China's industries. Collaboration with international companies brought in advanced technologies, management expertise, and access to global markets. Joint ventures allowed for knowledge transfer and created a favorable environment for economic growth. China strategically developed key industries such as manufacturing, textiles, electronics, and automobiles. The country became a manufacturing hub, producing a significant portion of the world's goods. Additionally, the development of a robust services sector, including finance, technology, and e-commerce, further diversified the economy. China's position in the global market dramatically evolved, transforming it into the world's largest exporter and a major player in international trade. Its vast labor force, cost-effective production, and improved infrastructure made it an attractive manufacturing base, driving its export-led growth strategy. China's accession to the World Trade Organization, WTO, in 2001 marked a significant turning point. It led to a surge in exports and provided access to global markets. Bilateral and multilateral trade agreements further enhanced China's trade relationships and facilitated export expansion. China's export basket diversified over the years, encompassing electronics, machinery, textiles, and more. The United States, European Union, and other Asian countries emerged as primary export destinations. China's ability to produce and export goods at competitive prices significantly contributed to its economic ascent. China recognized the importance of technological advancements in sustaining long-term growth. The nation prioritized research and development, aiming to become a global leader in science and technology. Investments in artificial intelligence, biotechnology, and renewable energy were key components of this strategy. The Chinese government launched initiatives such as Made in China 2025 inches to promote innovation and upgrade the industrial sector. Substantial investments in research and development were directed towards fostering homegrown technologies and attracting talent in science and engineering. Technological growth had a profound impact on China's economy, driving efficiency, productivity, and competitiveness. It allowed the nation to move up the value chain, produce high-quality products, and emerge as a significant player in global innovation. China's technological prowess reshaped various sectors and positioned it as a formidable contender in the global tech landscape. China attracted substantial foreign direct investment, FDI, due to its growing market, skilled labor force, and conducive business environment. The government's efforts to ease regulations and streamline administrative processes made it an attractive destination for investors. Simultaneously, domestic investment surged, propelled by government-led infrastructure projects. China embarked on ambitious infrastructure projects, including high-speed railways, ports, airports, and urban development. These projects not only boosted domestic demand, but also enhanced connectivity, facilitating trade and economic growth. The extensive infrastructure network positioned China as a hub for regional and international trade. The Belt and Road Initiative, BRI, is a monumental infrastructure project aimed at improving connectivity between Asia, Europe, Africa, and beyond. It involves investments in roads, railways, ports, and energy infrastructure. The BRI has not only strengthened economic ties, but also extended China's influence in regions critical for trade and geopolitical considerations. China's economic growth led to a significant expansion of its middle class. Rising incomes, urbanization, and increased consumption propelled the middle class to become a dominant force in the economy. This shift in demographics altered consumer preferences, driving demand for higher quality products and services. The changing consumer behavior of the middle class had a cascading effect on market dynamics. Demand for automobiles, electronics, luxury goods, and travel soared. E-commerce platforms witnessed a surge in online shopping, transforming the retail landscape. Businesses had to adapt to these shifts to remain competitive. The rise of the middle class in China presented lucrative opportunities for global businesses. It created a vast consumer base for both domestic and international products. Multinational corporations sought to tap into this market by tailoring their products and marketing strategies to cater to the preferences and purchasing power of the growing middle class. China's financial sector underwent significant reforms to align with international standards and attract foreign investment. The establishment of stock exchanges, bond markets, and regulatory reforms aimed to create a transparent and efficient financial system. These reforms were critical in supporting economic growth. China gradually opened up its capital markets to foreign investors, allowing them access to stocks, bonds, and other financial instruments. Initiatives like the Stock Connect and Bond Connect programs facilitated this opening, enhancing foreign participation and contributing to the integration of Chinese markets with the global financial system. China's growing economic influence translated into a more prominent role in global finance. The inclusion of the Chinese yuan in the International Monetary Fund's Special Drawing Rights (SDR) basket and its efforts to internationalize the yuan marked significant milestones. China's financial diplomacy and investment in various countries solidified its position as a key player in the international financial landscape. China's economic power significantly influenced its geopolitical standing. As the nation became a major global economic player, its influence in international affairs grew. Geopolitical considerations started to intertwine with economic decisions, impacting trade agreements, alliances, and diplomatic relations. The Belt and Road Initiative, a flagship foreign policy project, had far-reaching geopolitical implications. It allowed China to expand its influence across Asia, Europe, and Africa, creating a network of economic and political ties. Critics viewed it as a strategy to extend China's influence and gain strategic advantages in key regions. China's economic diplomacy involved leveraging its economic prowess to advance its strategic interests. The country engaged in bilateral and multilateral negotiations, trade agreements, and economic aid programs. Economic diplomacy was used to strengthen alliances, secure access to resources, and enhance its geopolitical positioning on the global stage. China recognized the environmental challenges associated with rapid economic growth and took proactive measures to address them. The government implemented policies to promote sustainable development, reduce pollution, and transition to renewable energy sources. Green initiatives aimed to strike a balance between economic growth and environmental preservation. The environmental challenges, including air and water pollution, posed risks to public health and the economy. The economic impact of environmental degradation was significant, leading to increased healthcare costs and productivity losses. Addressing these challenges became imperative for long-term sustainable growth. The Chinese government implemented policies like the Green Development Concept and three-year action plan to win the Blue Sky Defense War, to curb pollution and promote environmental sustainability. These policies emphasized green technologies, renewable energy, emission reductions, and conservation efforts. China faced several internal challenges in sustaining its economic growth. Issues such as an aging population, income inequality, debt levels, and overcapacity in certain industries posed risks to the economy. Addressing these challenges required careful planning and policy interventions. China's economic growth was also vulnerable to external risks, including global economic slowdowns, trade tensions, and geopolitical conflicts. The interconnectedness of the global economy meant that developments in other parts of the world could have a significant impact on China's economic trajectory. China adopted various mitigation strategies to address challenges and mitigate risks. These strategies involved economic reforms, diversifying trade relationships, investing in technology, and maintaining prudent fiscal and monetary policies. Additionally, international cooperation and diplomacy were seen as crucial for navigating global uncertainties. Predicting the future of China's economy is complex, but projections suggest continued growth, albeit at a slower pace. China is expected to focus on domestic consumption, technological innovation, and sustainable development. Efforts to upgrade industries and advance in high-tech sectors are likely to be central to its future economic prospects. Gaining opportunities lie in sectors like technology, e-commerce, healthcare, and renewable energy. China's emphasis on innovation and transitioning to a consumption-driven economy will drive growth in these sectors. The Belt and Road Initiative will continue to present opportunities for international collaboration and investment. China's role in the global economy is expected to expand further. It will likely exert more influence in international organizations and play a critical role in shaping global trade and economic policies. As China continues to grow economically, its strategic decisions and policies will have implications for the world at large. China's economic growth journey is a testament to the power of strategic reforms, visionary leadership, and a motivated populace. The transformation from an agrarian economy to an economic superpower within a few decades is a remarkable feat. The reforms initiated in the late 1970s set the stage for this unprecedented growth, and subsequent policies further propelled the nation forward. China's economic significance on the global stage cannot be overstated. Its growth has altered trade dynamics, supply chains, and geopolitical alignments. As China's influence continues to expand, the world watches with anticipation, recognizing that its decisions and actions will shape the course of international affairs. The story of China's economic growth is a dynamic and ongoing narrative. It is a story of resilience, adaptability, and determination to rise to the top. As China navigates the challenges and opportunities that lie ahead, the world waits to witness the next chapters in this remarkable tale of economic evolution. China's rise has undoubtedly changed the global economic landscape, and its future endeavors will continue to shape the world in ways yet to be fully comprehended.